Welcome to today's Tomorrow Report on Wednesday the 1st of June with me, Richard Pro Market Analyst at Antec Markets. There's a degree of caution that we've got in the markets today. It's PMI day, so it's expected to be, I'd imagine, a fair bit of volatility this afternoon around that ISM data, which could well hold some significant implications for potential for rate hike going forward. So markets are fairly sort of settled in front of that. You've got equity markets that are basically flat, nothing really doing there. Wall Street was basically flat overnight. Again, nothing really happening. The dollar mildly lower. It sort of is lower across the board actually. With the what we've seen has Treasury markets or Treasury yields, I should say. Sorry, fell away yesterday. As a sort of a more of a safe haven trade came through. We saw the gold price finding support. We saw the yen starting to sort of claw back some of the losses against the dollar in the last few weeks, and subsequently we saw the dollar just mildly correcting a bit today, and as that move has seen, but nothing too significant yet. But it'll be interesting to see if this develops. Now, one chart I did want to show you was this. Sterling volatility chart has increased massively in the last few days, as a few Brexit polls have come out suggesting how close the vote could well be. So that's subsequently generated significant increase in options pricing and volatility, and it seems to be a bit of an issue. Obviously, we had a big correction on sterling yesterday. Has it changed the outlook? Well, I'll go through my assessment on cable in my chart analysis video in a bit, but it certainly has had a big impact on the chart. Now, we've got the PMIs today. We've had a few out already. Sorry, that's not the PMIs. Here we go. Out of the Eurozone. Mixed bag, really. Nothing too significant in terms of beats or misses on the final data. Slight improvement on the final reading or better reading that for France. Germany, slight miss. And the Eurozone generally basically in line, so nothing too significant there. You've got the UK data out at 9:30. That's expected to be 49.6, which is a slight improvement on last month. A very slight improvement on last month. If I can find the chart. There you go. Slight improvement on last month, which was 49.2. And then you've got the ISM data this afternoon, which is the key data for the day. 50.4 is the expectation there. So that would be a second month in a row of just falling away. So that wouldn't be necessarily that positive for rate hike expectations if that were to be seen, because there is a pretty decent correlation between growth and the PMIs. So the PMIs falling back is not all that positive for growth going forward. So that takes me to my chart of the day, which is the Euro Sterling. Now, Euro Sterling is an interesting chart at the moment because we've had this big head and shoulders top pattern completed a couple of weeks ago on the break below 76.90. We've had a rally now back to that neckline. Now, look at this neckline. I'm saying that this is between 76.90 and 77.50. Look how important 77.50 has been on Euro Sterling. Caught the low there in 2012, caught the low there in October 2014, and subsequently in the last sort of, if I zoom in quicker, subsequently we saw the rally a couple of weeks ago hitting that 77.50 and coming off. So I think that this neckline between 76.90 and 77.50 is a significant overhead resistance on Euro Sterling, and that rally that we saw yesterday, big bullish engulfing candle, which sort of induced theoretically is a turnaround candle, but it's back into this big overhead resistance. So you need to see much more sort of confirmation that the bulls are sort of trying to return, and that would be sort of coming through with, I think, Euro strength, because we've had we've had sort of sterling weakness yesterday. Now sterling has been the big volatility play in the last few weeks, really, with the fact that the Brexit vote is coming up. Traders getting increasingly sort of cautious and worried about how this one's going to play out. So sterling has had a significant turnaround yesterday. Now, is it the start of a trend? Well, today it's sort of cautiously sort of looking out for the next move, really, just consolidating. And on euro sterling, that is up at a big neckline resistance, interestingly enough. So I still think the fact that we're playing out this corrective move, because you look at the momentum indicators, you've got the RSI sort of had been supportive, hadn't it? Sort of, what's that, mid 40s? 47 is where that green line is. Mid 50s was where the rally sort of fell over in May, and you're now up to 43. So you might get a little bit more of a squeeze to the upside, but again, as I said, I think it's sort of more the fact that we're in a corrective play. So the MACD lines are corrective as well. So rallies look to be a chance to sell across these daily indicators. Now you've got the hourly chart, which has sort of moved higher. I mean, that moved yesterday, that breakout above 76.40, you could argue created a small base pattern. You take that as a measurement from 75.60, 76.40, what's that, 80 ticks, measure it higher, is 77.20, which is bang in the middle of that sort of resistance band, 76.90 to 77.50. So we could see that today, but as I said again, I think that is going to be the limit of the upside recovery, because I think that that is a significant overhead resistance or overhead supply band, and I think that if there was a move above 77.50 and it was confirmed, then I think that would be a considerable turnaround in the outlook generally, because that would be another lower high that had been broken. But for now, I think you need to treat this as a bear market rally, and it's likely to be sold off. So just keep that, just bear that in mind. So I wish you good luck in your trading today on euro sterling. The support comes in yesterday's low 77.50 and 75.60. Sorry, what am I talking about? 75.70 and 75.60. So I wish you good luck in your trading, and I'll speak to you later. Thank you.